Hello everyone, welcome to this comprehensive analysis of the Economic Survey 2024-25, an annual report released by Ministry of Finance. This survey not only reviews the past year economic performance but also provides policy recommendations for the future. Now you might wonder, why is this survey important? Think of it like a health checkup for the country's economy. Just like a doctor assesses different aspects of health, this survey examines various sectors like agriculture, industry, and service to understand how the economy is performing. So, in this video, we will break down the most crucial insights so you can grasp the key takeaways without getting lost in complex data. We will provide some examples to make this concept relatable and easy to understand. So let's get started. So the economic survey is an annual report by Ministry of Finance, which is presented before union budget. It acts as a guiding document for policy makers, investors, researchers. This year's survey highlights India's resilience amidst global uncertainties and outline key performers outlines key policy directions for sustainable growth. For instance, in the past year, despite rising global inflation and economic slowdowns in major countries like you have Germany and UK, India managed to maintain steady economic growth. This is largely due to strong domestic consumption and effective policy interventions. To simplify, imagine a household where income fluctuations due to various factors, but careful budgeting and some you can say some smart investment keep it stable. Similarly, India's economy has remained strong due to good financial management and strategic planning. So, India's GDP is projected to grow at 6.4% in a fiscal in your financial year 2025, that is growth of 6.4% financial year 2025, reflecting strong economic fundamentals. The agriculture sector has also shown robust kharif output, that is you can say strong kharif output, while the service sector, especially the IT and the financial service, continues to a major driver of this IT and financial service continues to be a major driver of growth. Inflation has moderated to 5.2%, showcasing effective economic management. To understand this better, let us take the example of India's IT sector. Companies like TCS, Wipro, Infosys have been expanding globally, providing employment and contributing to GDP growth. Similarly, the strong performance of financial services, such as the growing penetration of digital banking, has helped stabilize the economy. In simple terms, you can say that GDP growth is like a company increasing its revenue every year. If a business expands by hiring more employees and launching new products, it grows financially. The same applies to a country's economy. So that is the GDP growth. For an example, like I have connected to a real life example via a company. So the RBI of India has, that is Reserve Bank of India, has maintained a balanced monetary policy to ensure price stability and growth, that is RBI's balanced monetary policy. The banking sector remains stable with declining non-performing assets, NPAs, banking sector stable, declining non-performing assets, and digital payments led by UPI continue to expand at a rapid pace. So growth in digital payments and UPI. Take for an example, the success of UPI in the past 5 years. UPI transactions have surged, allowing even small street vendors to accept digital payments. This has boosted financial inclusion and economic participation across all levels of societies. Think of UPI like digital wallet, just like how you used to carry cash. Now you can pay instantly with our smartphone. What the smartphone you are carrying with yourself, you can pay with it, making transaction faster and more convenient. Now the India's trade deficit has narrowed and foreign exchange reserves has increased to $645 billion. The service sector exports has shown a significant rise, indicating India's strong position in the global market. A real life example in this Indian pharmaceutical industry, companies like Institute of India and Sun Pharma have expanded their exports, contributing to the increase in foreign reserves and trade surplus. In simpler terms, trade surplus means a country is exporting more than it's importing. Similarly, to a business selling more than it buys, making profits and boosting financial strength. Okay. Now, for inflation remains under control at 5.2%. Government interventions like buffer stock management, and price control mechanism has played a crucial role in keeping food inflation in check. For example, during periods of high onion prices, the government released buffer stocks to stabilize prices, ensuring affordability for consumers. This strategic move helped curb inflation. Imagine grocery prices suddenly rises. If the government steps in and releases extra supplies, price drops, making food affordable again. This is exactly how inflation control works. Okay. Now the government has allocated 10 lakh crores rupees 10 lakh crores for infrastructure projects covering roads, railways, urban developments. The production linked initiative PLI scheme has further boosted private investments. A real world example of infrastructure development is the rapid expansion of Mumbai metro network, which has significantly improved urban mobility and reduced time travel for the consumers. After that, infrastructure investment is like building better roads in an housing society. It improves transportation, attracts business, and increases property values. The same logic applies to a country's economy also. The industrial sector is a key driver of the economy and economic growth. This year, the government is boosting local manufacturing through production link initiative, that is PLI scheme, encouraging companies to produce goods within India. The MSME sector is also receiving increased credit limits. MSME sector is also receiving increased credit limits to support grow and to expand further. In simple terms, this means that businesses both big and small are being encouraged to manufacture products in India instead of importing them. This will create jobs and strengthen India's economy. For example, you know that the Apple iPhone production in India under the PLI scheme is a success story. Many components that were earlier imported and now made in India, generating jobs and reducing dependencies on foreign supplies. Okay. The service sector contributes 55% of India's GDP, making it the largest sector in the economy. The biggest contributors are IT and financial services, followed by tourism, retail, logistics. Post COVID, the hospitality and tourism industries are seeking a strong recovery. In simple terms, we can say that the service sector includes everything from banking and insurance to hotel and online shopping. Every time you book a hotel on OYO, make a bank transfer via UPI or use Amazon for shopping, you are engaging with the service sector. For example, you can say that the success of India's IT companies like Infosys, TCS, Wipro, which provide tech solutions globally, shown how the service sectors drives economic growth. So, agriculture remains the livelihood of nearly 50% of India's population. This year, record food grains production of 1647 LMT. LMT is lakh meter metric tons are achieved. The government is also focusing on farmer mechanization, irrigation improvements, and dairy and fishery expansions. Okay, in so we can say that agriculture is not just for about growing crops but also include dairy, poultry and fish farming. Better irrigation and machines help farmers grow more crop efficiently. The government's PM Kisan scheme provides different financial supports to farmers. This has helped millions of farmers buy better to buy better seeds, fertilizers and equipments. So, for the social sector, education and health, social development is crucial for a strong economy, as we all know. The National Education Policy NEP 2020 is making education more skilled based. So, more skilled based education, while the Ayushman Bharat scheme provides free healthcare to 5 crore families. Digital health and telemedicines are also growing rapidly. The government, like you can see that government is working to improve school, colleges and hospitals, ensuring that everyone has access to education and healthcare. Ayushman Bharat allows poor families to get free hospital treatments, reducing medical expenses. So we can say that a farmer's son from a village can now learn coding and AI through online platforms like Swim. So there is a platform Swim, and his family can get free treatments for serious illness under the Ayushman Bharat scheme. So, employment is the most important factor for social stability. The unemployment rate is 6.8%, and the female workforce participation rate has increased to 47.6%. Programs like PMKVY, Pradhan Mantri Kaushal Vikas Yojana, and Skill India are helping young people to get become job ready. The government is helping young people learn new skills like coding, plumbing or electrician work, so that they can find better jobs. Women are also getting also joining the workforce in greater numbers, making India's economy more inclusive. Let's say a young woman in Mumbai learning graphic designers under Skill India and getting a remote job with a global company. This is how skill program are changing lives. So every economy faces challenges and opportunities. India must tackle global trade restrictions and climate risk. That is global trade restrictions and climate risk. But it has also strong domestic demands and booming digital economy that can drive further growth. While rising import tariffs in the USA and Europe can hurt export, India has huge potential to startups, digital payments, and green economy. For example, the growth of UPI digital payments shows how India's digital economy is thriving. Even a small tea stall owner can accept payment via QR code, providing how technology is bridging economic gaps. So, for conclusion, we can say that India's economy is resilient, despite global uncertainties. That Indian economy is remain resilient. The key to sustain growth is investment, innovation, and policy reforms. If future ready India needs better infrastructure, digital transformation, and skilled work. India is on the right path, but we must continue to invest in education, technology, and infrastructure to become a global leader. If we invest in high speed internet for rural areas, we can create millions of online jobs for students and professionals, transforming India's economy in the next decade. So that's all for the detailed breakdown of the economic survey 2024-25. We hope you find this analysis insightful. If you enjoyed the video, do not forget to like, subscribe and share to stay updated with more such contents. Comment below with your thoughts or queries. We will be happy to discuss. Thank you for watching. And last, remember, understanding economics doesn't have to be complicated. It's all about simplifying concepts and relating them to everyday life. The more you understand, the better decision we can make for the future. Thank you.